Hello everyone and welcome back to Sudden Wealth. I hope that the week is going very well for you guys. Sorry, I have a little bit something here in front. By the way, guys, I scheduled the live stream for Thursday. There was a person that also had a question about Zen crypto, so I'll be addressing that during the live stream. But on Thursday, my plan is to go through some of my 2024 predictions. Some have already happened, otherwise are undergoing, and I wish that most of you can attend. Hopefully, if you cannot attend, at least watch it later. And don't forget, guys, if you do enjoy the content, please consider dropping that like and subscribe. We are now only 20 subs away from the magical number of 1,000. So it would be great actually to close out the week approaching that 1,000 mark. Now, today, there's not so much in the markets. Most indices are, either flat, Nasdaq a little bit down, Dow Jones and Russell a little bit up. Not big deals. Bitcoin is moving above 43,000, and Ethereum is jumping 4% today. One of the things, as you know, I've predicted a altcoin season coming, late Feb, March, and one of the things that I want to see now is a decisive outperformance of Ethereum in the month of February versus Bitcoin. So far, so good, but I want to see this momentum keep going. ICOSA is back up 20%. Pulse Chain holding out stable. PulseX doing fine as well. Still very undervalued in my opinion. I think we still have a good at least 50x from here, but we'll see. But that just represents opportunity to me, as you may well know. I'm a big enthusiast of these projects: Pulse Chain, PulseX, X, Hedron, and ICOSA. And to me, the longer they keep undervalued, the more opportunity it is for me, because I have in my mind zero doubt that those coins will succeed. Now, does that mean that you should go ahead and go all in and copy me? Hell no. I'm just here broadcasting my journey. That's it. Not here to lead anybody, but hopefully share some of my knowledge, and that can help you guys, or at least learn the trends, understand the differentiate the lot of noise with the little key points, and don't get lost into all the minutiae and all the craziness. Now, last year, for those of you who've been following me longer, last year everybody was predicting, commercial real estate was going to cause a big crash. Then it was the banks were going to cause a big crash. And I said, no, forget about those two. Pay attention. For big sell-offs, pay attention to two things. Two things that everybody's in agreement that can only go well. Number one is government debt. Why is it so safe, right? It's so safe. It can never go down, blah, 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 all of this stuff. All the sell-offs that we had 2023, and by the way, all the sell-offs that we've been experiencing 2024 are preceded by big sell-offs on TLT. So TLT is the ETF that has basically 10 and 30-year-old bonds, treasuries from the US government debt with an average duration of 20 years. Every time that index sells off aggressively, stocks end up following over the next few days. So that was, and I said, well, since people are so convinced that government debt is so safe, maybe that tells me that can be cause for concern, cause for volatility, and cause for sell-offs. Number two, if you guys recall, was China, because everybody was so convinced that China was going to overtake the world. The US and Europe were all has-beens, and now it's the time for China to shine. I said, look, China looks to me a lot like Japan 1980s. A lot of excitement, fast growth, debt-fueled growth, bubbles everywhere, particularly in real estate. Same thing as China, right? So what's happening in China? If you check the major Chinese stock indices, so let's say in the US you have S&P 500, Nasdaq, Dow Jones, Russell, right? But in China, you also have stock indices. right? Same thing. CSI 300 is the most famous one. Those stocks are down 45% from its peak since, I think, 2021, and they are actually down versus 2015. 45%. That's a big deal. Now, for those of you who don't know, China has been back to stimulus and money printing for about a year now, and they are battling deflation. So the reason why I'm bringing this up, and of course they also have the bank runs and all of that, and exports and imports are plummeting everywhere, and factory output is garbage, all of this kind of stuff. Of course, and these numbers already come quite sanitized by the Chinese government, so probably the real numbers are even worse. And of course you have the big property disaster with Evergrande going defaulting and going bankrupt, and all sorts of real estate developments having issues. See, what China did was, and that's why I was convinced that China was going to be the next Japan 1980s, is because all their growth was fueled by extreme debt expansion. You see, let's say that I run a house like this. You come to my house, or you look at me, and every month I have a new car, I have a new house, I have, a bunch of stuff. And you ask me, hey son, are you making more money? Yes, I am. But how are you financing all of this? Is because, your productivity, savings. No, it's mostly debt. So you see, if you give me 10 credit cards, for a while, I can show you that I'm doing very, very well until this game ends up. You see, everyone is talking about the de-dollarization. So basically, countries getting rid of the dollars, which is true. That is happening. But these things take decades. They don't take, 1 year. Like sometimes it's presented in this YouTube financial reporting and all of that. This takes decades. You see, the yuan, the Chinese currency, is about 3% of global trade versus the US 50%. So there are orders. So when they do deals like, oh my God, Saudi Arabia is now accepting yuan for oil, in the global economy, that means very little. 3% of all trades are in yuan, 50 are in dollars. Big difference. That means that then if you have cash flows in dollars, you need dollar debt. But who prints dollar debt? The Fed. Local countries cannot do it. So when the Fed prints money, it gets spread out through the world. That means, this is the funny part, you can have too many dollars domestically and have inflation, and have a shortage of dollars abroad. Think about it. It's very crazy. You can have, so basically the solution can be printing more to solve a dollar shortage while having inflation at the same time in your own market. That's how dynamic these things are. You have, let's say you have the real dollar, let's call it the real dollar, the dollar that is in the US economy, and then you have the financial dollar, which is spread across the world. But going back to China. So China has grown exponentially over the past 30, 40 years, extremely debt-fueled basis. So all the things that are wrong with the US, and there are many, by the way, all the debt metrics, all that sort of stuff, it's orders of magnitude worse in China. And you see, China cannot have it because it's a dictatorship. So for example, when we have, look, any economy has a business cycle. You have good times, you have bad times. You have times where people get super excited and they do something they shouldn't, so they need to pay the price in a recession. But the problem is, when you have a dictatorship, you cannot allow it. So every time that China has any little issues, it's money printing, debt expansion, build stuff for nobody. I mean, you have some of the most amazing infrastructure projects in China that you get completely amazed. Problem is, nobody uses them. That's it. There's no one there. So it's all useless. You see, but you can report it under your GDP, but you're just building stuff for no one. So this game will end I'm not predicting China to collapse tomorrow or anything like that. But for people who think that China over the next decade or so will overtake the rest of the world, just like the US did in the past, you're completely wrong. You see, in the US, if there's big recession, well, you elect someone else and we move forward. In China, no. So China has this, this bad deal with the population, which is, look guys, you have no political freedom, but your standards of living will go up. As soon as this stops, the population will come and say, okay, but if my standards of living are deteriorating, why would I tolerate a dictatorship? At least let me have freedom. It's better than nothing, right? So that's the situation with China. You have bank runs, you have protests, you have all sorts of stuff. Even though it's sanitized mostly by the Chinese government, it's still some of this stuff gets out. And here, this entails something that I've been talking before, that some people got to be confused. You see, China is printing money, lowering interest rates, stimulating the economy, and still they have deflation. Now, the question is why? Because the excessive debt is such a burden on growth that even though you're printing a lot of money, the great majority of it is preventing deflation of debt bubbles. So what it means is, without all this money printing, deflation would probably be bigger. But all the money printing is pushing the debts to stay afloat, although they should deflate, fire people, unemployment, all of that stuff. Number two is, the general Chinese population is already over-indebted. So this is exactly what I've been saying, and why people like Peter Schiff get this wrong. They just assume that if the Fed prints money, rates go down, inflation goes up. No, because once these people go to the Chinese banks and say, hey, can you give me a loan? Chinese bank will look, no, you already have 2 loans on 2 different houses, you have credit card loans, you have personal loans, you have car loans, you're already over-indebted. So forget about it. So the money doesn't go out. So this is how China is printing money, is desperate to create inflation. Why is that? But then you say, okay, but deflation, wouldn't it be good, right? Because the cost of living of people is going down. Yeah, but this is the problem. In deflation, debt is worth more. Think about it. If the price of things are going down over time, then yuan or dollars or euros in the future are worth more than euro, dollar, yuan now. The opposite of inflation. Yeah, but the problem is, what is debt? It's a promise of paying yuan, euro, dollar in the future when it's worth more. The reason why the Chinese government wants inflation is in order to lower its debt by, yes, paying the same fixed amount, but that fixed amount is worth less. But they can't do it because the only way they're going to create real inflation is if they just print the money and give it randomly to Chinese people. But if you do it, here is the big problem. This is why it's so difficult. Once again, when the US prints money, half of it goes to the rest of the world. Half of it stays around there. Okay? But when China prints it, almost all of it stays in China. 97%. So if you print too much and you give it straight to people, this is the key. Give it straight to people, you can spiral things into inflation quite aggressively, but your exports are not benefiting from it because your currency will lose value versus the other currencies. So this is the issue that China faces. It cannot tolerate recessions because it's a dictatorship. However, the economy is so over-indebted, way worse than Europe and the US, maybe only comparable to Japan, or worse, actually. Since they have this excessive debt pressure on top of them, since people are already so over-indebted to be eligible for getting loans, they are stuck in the situation where they print stimulus, but inflation keeps going down. So this is a perfect example why all these people get so crazy about. Oh my God, when the Fed cuts rates, inflation shoots back up. That's a lie. Look at China. Look at Japan over the last 30 years. Did nothing but print money. Inflation goes nowhere. How many more times do you need to see the same thing? But this was the point, because I've spoken about this in the past, but I wanted to give you a live, in-your-face example. Printing money, stimulus for a year, cutting interest rates, facing deflation. I was right. Peter Schiff theories were again wrong. And with that, guys, I'll leave you be. I hope that you enjoy the content. Don't forget, drop that like and subscribe, and I'll catch you in the next one.